ESG is a type of investment that puts into consideration the environmental, social, and governance factors of a company alongside its financial scorecard. Environmental factors include carbon footprint, water usage, pollution levels, and waste management practices. Social factors involve things such as a company's employee relations, diversity and inclusion initiatives, and human rights record. Governance looks at the board member composition, executive compensation, and transparency. Now, just like any investors, ESG shareholders value diversification and, of course, financial returns, but they put more focus on long-term value. Firms that meet ESG aspects are also seen as less likely to get exposed to risks such as climate change, social unrest, and corporate scandals. And so, parking money in ESG stocks gives investors a sense that they're doing something good for the planet and society. Since the term was first coined in 2005, the trend for ESG investing slowly but surely picked up some pace. As of late 2021, a record $649 billion poured into funds marketed as sustainable, and that was 10% of worldwide fund assets. But in light of the turbulent markets in 2022, there was a reversal to net outflows for the first time in more than a decade. Still, ethical investing remains a growing force in capital markets. There are several ways to invest in the ESG space, such as buying shares of individual firms, and there are also ESG mutual funds, and these work like exchange-traded funds or ETFs that track a basket of ESG compliant stocks. Now, some might argue that ESG can be more expensive than conventional investing due to the higher management fees. The pool of options is also smaller, usually involving companies that are less well known. And with the lack of standardization, it can take more time and effort to understand how firms are being evaluated and avoid the so-called greenwashing, the manipulation of information to bolster ESG credentials. ESG investing is relatively new, so more evidence may be needed to gauge its long-term performance. But there's now greater emphasis on transparency, with organizations such as the Global Reporting Initiative providing framework and guidelines for companies to follow. And the future looks promising with the advances in real-time analytics, AI, and machine learning algorithms leading to more comprehensive ESG assessments and investment options. For investors, that means more alternatives to put their money to work in businesses that are willing to act responsibly, or at least try to make the world a better place. For CNA Explains, I'm Olivia Marzuki.